Hello and welcome to On the Couch with Steve, a podcast where we help you navigate the often complex world of buying and selling real estate. I'm Steve Athanates. I'm the owner of NG Real Estate, so thank you and welcome along. I've got Steve Beach from Stanford Financial. Steve's obviously a great friend of On the Couch with Steve. We're going to talk about something that's really topical today, and there's no better person to get some advice from than Steve. We're going to talk about what sort of assistance there is out there for first home buyers. So obviously a lot of people trying to get into the market. It's very complex, let's face it. There's a range of grants, subsidies that are available to people trying to get into the market to help them combat the cost of living and obviously the fact that house prices continue to rise. So without any further ado, we'll jump in and we'll have a chat to Steve about, from a financial point of view, Steve, someone who's trying to get into the market, so a first home buyer, they've never bought before, they're obviously saving their little hearts out. What can they do? What assistance is available to them?
I guess there's a few different factors that you can take into consideration. So particularly first home buyers, there are a lot of government schemes out there. So I always get the name wrong, but I think it's called the First Home Deposit Scheme because they changed it just recently. So that's where if you are a first home buyer, you only need a 5% deposit of what they call as genuine savings. And a lot of banks are actually loosening up that sort of rule. In particular, CBA, you only need to have genuine savings for 1 month now. So what that means is you just have to have the deposit in your bank account for a period of 1 month.
What did they used to have it?
So it's 3 months. You had to have an increase of your bank account steadily over a period of 3 months, and that can only be increased by your wages. So a sale of a car or a gift or an inheritance didn't count as genuine savings. So there's a lot of sort of rules and regulations around that. So they've sort of loosened it up a little bit to make it, I guess, more affordable and a lot easier nowadays, because with the raising of rents and everything along those lines, it is harder to save
money,
those deposits now. Again, it doesn't necessarily have to be just solely first home buyers. There's also the single parent first home guarantee scheme where you only need a 2% deposit to get back into the marketplace. So unfortunately, we have seen through COVID there's been a lot of separations and bits and pieces, unfortunately. But it's as a way that the government is helping those people once they do separate, clear out all the debts. They've got a little bit of money left over, and ultimately this can help them get back into the housing market.
So into the market with a 2% deposit.
2%, yeah.
So even if you're talking about a $600,000 house, 12 grand plus costs,
plus your stamp duties and bits and pieces. So
even obviously that's going to run you a few bucks as well too. So you'd want to have at least still 20 to
25 grand sort of thing. Yep.
And so even as a single parent, depending on what your wage level is like, because obviously there's going to be an issue of affordability, but you can still get yourself into a $500,000 to $600,000 property with $20,000 to $25,000.
That's correct. Yep.
Okay, well, I think that's a great incentive to people to buy as opposed to rent.
Yes.
All right, so what else is out there for people?
So a big one that we're actually seeing quite a lot of is what we call as family guarantee. So where not necessarily young kids, but can be more mature adults trying to get into the marketplace. Whereas if your parent has quite a bit of equity in their property, they can just do what they call as a security guarantee. So they don't have to meet what we call as means testing. So we're not using their income, just the equity in their house, for the kids to be able to buy their own home. So, and by doing that way, one, they unlock what we call as a sub 80 interest rate. So that's where you get the really cheap interest rates. You're not having to pay lender's mortgage insurance, and you can literally buy a house with, I'm going to use the word zero deposit. Most of the time, the real estate agents are going to want a deposit to hold the contract, but that can be refunded upon settlement. So you can literally buy a house with zero deposit if your parents are willing to help out and unlock some of their equity in their home.
So you've obviously they've got to be direct. It's your children.
Yes.
So no extended relatives and stuff like that. It's just your own children.
It's parents and grandparents.
Right.
So if there is some loosely out there, you can probably potentially get an uncle. If let's say your father passed away and your uncle became more of a father figure. If there's a link somewhere like that, then we can sort of talk to the banks that they want to help out.
Okay. So important. If you've got a situation where someone in the family, preferably parents or grandparents, have got a lot of money effectively locked into their own dwelling, because that's one of the things about Australia. Australia has one of the highest rates of home ownership in the world. So lots of people have done the hard yards, they've saved, they potentially bought the properties when prices were significantly lower. They've gained a lot of equity in their properties, even if they don't own them. When you think about it, over the last 2 years, house prices have risen
33%.
33%. So they've gained a third of their value over the last 3 years, really by doing nothing, just owning it. So we can unlock some of that equity and obviously get someone into a house. There's no money down.
With zero deposit.
Okay, that's an awesome scheme. That's a great scheme. So whoever came up with that, that's a beauty.
Yeah, it's only a handful of banks that actually offer that. So ultimately, there are terms and conditions. So we can get it all approved. We, myself as a credit representative, I conduct the interview not only with the kids to get them approved for their portion of the loan, then conduct the interview with the parents, but they just have to get independent legal advice, ultimately, because they are releasing equity without any sort of because their name's not on the title of the kid's house. It's just putting a second mortgage. We do get a few parents sort of a bit more concerned, like, oh, well, I don't want to be now tied to my kid's mortgage for the next 30 years. I'm looking to retire. As soon as the kid's house actually has the 20% equity, so if you get your equity reduces below 80%, you can release the parents off the house. So through COVID, we actually saw some kids buy a house, and within a year, their property price increase that much that we could get the parents' mortgage off straight away.
Okay, so on that note, we'll talk about the housing market now. The housing market continues to rise in price. Generally, it's running around 3% a quarter. It's going up. So effectively, they're expecting that to continue through to 2024. So even if you wanted to buy a house now, there's a reasonable chance that even if you had it for a year, you could expect, even if the trends continued, you might be able to pick up anywhere between 9 and 12% equity increase over the next year just because you bought it today.
Yeah. So buy a $600,000 house today, potential based on that mathematics, you'd be looking at $660,000 is the property value. This time next year. So, and we're seeing a lot of people utilise that because there has been such high growth is unlocking capabilities of remortgaging, paying out a car loan or a personal loan, utilising that sort of equity, or buying a house and it may not be the perfect house to begin with, releasing some equity to do renovations. So we're seeing a lot of people put solar batteries to try and reduce cost of living. Ultimately you can have a look at air conditioning is a big one at the moment as well, or even just sort of standard renovations of painting, landscaping, that kind of stuff.
All right, so for the first homeowners out there, if you're looking to get in, mum and dad have owned the house for an extended period of time, it's really now time to be extra nice to mum and dad, nan and pop, whoever you want. Ask them if there's an option that you could use some of their equity in the house, because remember, physically they're not actually giving you any money. You're unlocking the equity in their house to get yourself into the market.
That's correct.
And I think it's important you explain that to mum and dad. Definitely. They're not physically handing over any cash. Okay, so be nice to mum and dad. All right. What else have we got out there, Steve? Anything else for people who are first homeowners looking to get into the market? Well,
big thing in I guess we're in Ipswich in Queensland. Buying under $500,000 allows you to have exempt from stamp duty, so you only have to pay transfer duty. So you can save a lot of money initially up front. So again, reducing that amount of money or deposit that you need. So a lot of people like that. Again, with those government schemes in regards to the first home guarantee, I guess metro areas you can buy up to $700,000 is sort of the cap for purchasing of a house, and then in your more regional areas it's $550,000 is the property price cap, and that's where we've seen a few people, and particularly sort of down the Gold Coast, you're finding it hard to buy a property under $700,000 down the Gold Coast for families. So that's where this family guarantee comes into consideration quite a bit down there.
Okay, so again, something really positive to find out. And again, we're going to encourage people, if you are a first home buyer, get some advice. Like, we understand you don't know, you've never bought a house before, so you don't really know how it all works, but you need to talk to someone who does know how it works. So obviously Steve Beach from Stanford Financial, obviously great broker, great brokerage. You can talk to them. You can talk directly to a bank about what options are available for you. I'm in real estate. I didn't even understand that about the metro areas, that sometimes the prices increase depending on the location. So I just learned something today as well. So there's plenty to learn. So reach out to an expert. They'll get you into the market. Anything else, mate? It's been a wealth of knowledge so far.
I think that's probably about it from a government's perspective. I guess the other option is again, for people looking at buying through land and construction, so a brand new home. So there's two considerations for that. So land and construction, and then what we call is off the plan. So let's say there's an apartment complex being built. You don't get to pick it. You just go, I want that apartment, and it gets built for you. So they call it turnkey. There's what they call as the first home owners grant, and that is actually a cash payment of $15,000 in Queensland. So that can be used as deposit towards even some of these government schemes. So where you can do land construction up to $700,000, government can actually chip in the first $15,000 for you as well. So meaning that you only have to have a smaller deposit as well.
So I guess even if you are in those metro areas, the Gold Coast, inner city Brisbane, the apartment buying may be a cheaper, a more affordable option. And if you buy brand new, the advantage of obviously brand new, you'll get a $15,000 grant or subsidy. But you also then have the peace of mind that the property that you're buying really should require very minimal maintenance for an extended period of time, because everything's brand new. The appliances are brand new, the paint's brand new, everything's brand new. So there's really shouldn't be a lot going wrong with the house, which is going to help you with your ongoing costs. So if you are in a metro area where it's more expensive, really give some thought to maybe potential of units, townhouses, buying off the plan where there is new construction and there's an extra incentive.
Yep, definitely.
All right. Well, look. Hopefully that helps all the first home buyers out there. Like we understand, mate. It's complex. There's a range of subsidies, grants that are available to you, concessions. So all sorts of things that you can get. So, as always, mate, thank you so much for joining us. As I said at the start, you're an absolute wealth of knowledge when it comes to what we can do to help people to get into the market. Obviously, there's whole issues of discretionary spending and, try and save as hard as you can, put as much money in the bank as you can, but then talk to a financial, advisor, a mortgage broker, a bank about what you can get from the government.
Definitely.
So obviously, if you've enjoyed what you've heard today, please talk to us. Tell us what you're thinking. If you've got any questions, just click the link below. We'd love to hear from you. I'm Steve Athanates. I'm from NG Real Estate. Thanks for joining us On the Couch with Steve.